Hello, everyone. In this video, we're going to talk all about calculating profit and loss in economics. Now, if you've taken an accounting course before, you may have learned a little bit about calculating profit and loss, but keep in mind that this will look a little bit different in your economics classes. Before we get into the intricacies of the calculations, let's define a couple of terms. So profit is going to be our difference between revenue and costs. When we see TR, that's going to mean total revenue. And this is the amount that a firm receives from the sale of goods and services. Anytime that we see TC, this is going to represent total cost. And that's going to be the amount that a firm spends in order to be able to produce and sell those particular goods and services. Now, when we're calculating a profit or a loss, we just take total revenue minus total costs. We would earn a profit if our total revenue exceeds or is greater than our total costs. And we would be operating at a loss if our total costs were higher than our total revenue, meaning we made less than we spent. With economics, we get into explicit and implicit costs. Explicit costs are going to be these tangible out-of-pocket expenses, things like wages, food costs, and utilities. Whereas our implicit costs, these are going to be things that maybe are not explicitly paid for, but there is an opportunity cost for using the resources. This is like the opportunity cost of doing business, that opportunity cost of capital, which is like the return you could have earned at next best alternative. And then the opportunity cost of the owner's time, meaning the salary that you could have earned at the next best alternative. This is a really good slide because it gives you some examples of explicit versus implicit costs. So these are costs that are paid directly when we talk about explicit costs. Your electricity bill, the advertising in the newspaper, employee wages. Physically, you see money leaving your hands. But then there are the implicit costs, like the labor of your owner who works for the company but doesn't draw a salary, the capital that's been invested in the business, the use of the owner's car, computer, or any other personal equipment that's used to conduct business. It's really difficult to determine what these implicit costs might be, but we can go ahead and use a few different methods to get somewhere a little bit close. Now, before I mentioned that accounting and economic profit are not necessarily the same thing. Accounting profit is just revenues minus explicit costs, but with economic profit, we take our revenues minus our explicit and implicit costs. In other words, it's the accounting profit minus those implicit costs, and we'll talk about that a little bit more later. This is just an interesting exhibit from your book. It's table 8.2, and it shows the historical rates of return on stocks, bonds, and savings accounts from 1928 to 2018. So you can see that typically stocks have about an 8% return, bonds have about a 3%, and savings at a financial institution have about 2%. This is useful because it gives us a barometer for those implicit items. So if we hadn't spent our money on investing things into the business, perhaps we could have earned these particular rates outside. Now, when we think about what's going on with our firm, we want to look at, are we making enough with our particular company that it's worth it to have invested that money into the business rather than putting it into stocks, bonds, or savings at a financial institution? It is difficult when we determine economic profits because we have to try and come up with a tangible value of these implicit costs or those actual opportunity costs. So on this slide, we have a couple of different items, and then we have cost types and amounts. This first area that I'm highlighting here is the accounting profits. If you add up those explicit costs in red, it's going to get you $7,500. So the accounting profit would just be the $8,000 in revenue minus that $7,500 in explicit costs, or $500. Now, your economic profits, this is going to be your revenues minus your accounting profits minus those implicit costs as well. So in this case, your total expenses, including your explicit and implicit, would be $8,200. And even though you had an accounting profit of $500, we actually end up with an economic profit that's a loss of $200. This is why it's really important that whether you're looking at accounting or at our economic side, there are some different things that we need to take into consideration. Now, this is going to be where I go ahead and wrap up this video. If you have any questions, please feel free to reach out. Otherwise, I'll talk with you in the next one. Thank you.